Good afternoon. I would like to welcome you all to this Oxford webinar on intellectual property valuation for investment. We are extremely pleased to have such a distinct panel together here today to discuss on various aspects relating to IP valuation and investments. And we hope you will find it interesting, stimulating, and inspiring. For those who have not heard of Oxfirst before, Oxfirst is an economic consultancy that is specialized in intellectual property and competition law. We have all been academics at Oxford University. I myself am still a member of Oxford University, and the idea of launching Oxfirst was born in 2011 while I was still a full-time academic. And I thought the whole concept of the research of thinking around economic impact around intellectual property and competition law could be extremely interesting for market participants. It could help facilitate transactions in the market and could give new idea, new food for thought on how to manage intellectual property, how to extract value from IP, and how to formulate smart IP policies. And it's been now over a decade that we have been contributing to the real world, and we had a great time. We have helped a lot of different companies and governments and international organizations, courts, judges figure out what the value of IP is and how that relates to some principles in competition law. We also run a conference once a year, usually in early springtime, summer, and we hope you will join the conference. Will be the 9th IP and Competition Forum. This webinar, which we present here today, is actually an extraction from the conference. We had presented something along those lines already in June in Brussels at the 8th IP and Competition Forum. Please feel free during this webinar to raise questions. We'll try to unmute you. We'll have reserved a Q&A session. And please also feel free to get in touch with us if you're interested in getting involved in contributing to our webinar series, in contributing to our conference, in discussing questions around IP valuation. We hope we are an open platform of exchange which thrives on multidirectional exchange. So with this being said, I'd like to introduce our panel today. I'm very pleased to see that women are actually the majority on this panel, which is great progress. We have here today Olivia Tsai, who is Assistant General Counsel at Cruise. Cruise is an autonomous vehicles company, and its vehicles are already driving in Austin and in Phoenix. So it's an autonomous all-electric vehicle company, which was founded in 2013. And Olivia has held the position for a very long time already and has been with Cruise for 6 years. Dr. Kara Wessel-Wells holds a PhD in by and large what I'd call biology, reproductive physiology, and she's the founder and CEO of mGenesis. mGenesis is based in Texas, and mGenesis looks at predicting the evolution of embryos, and with the help of artificial intelligence and machine learning tools, which is not invasive, they are able already to predict the sex of a child and other features of a child. At present, that's concentrated for animals, especially cows. Tracy Drews is the founder, partner at Novak Drews Carroll. He has 25 years of experience in advising on intellectual property. He, together with Greg Nowak, they have also been very generous sponsors of the Side Business School at Oxford University and have, I must admit, it also enabled my own personal research. I'm very pleased that they're here today. And yeah, and I'll pass it now on to Tracy to formulate a couple of exciting questions around the issue of IP valuation and investments and how the two go together and what patent attorneys can contribute to the question.
Well, thank you, Roya. It's an honor to be a moderator on a panel like this. And so I think I include myself more as a moderator here. So in fact, your panel is 100% ladies today. And I think that's a tribute to the technology and the fact that what we are talking about is quite a bit of not just intellectual property, but also artificial intelligence, and the protection within the areas. So one of the things that when Roya and I talked about this, and she had mentioned it was an extract of, we did a presentation from Brussels several months ago. And one of the things that seemed to be appreciated was we talked about creating portfolios that were in line with management goals. That most of the companies, especially the younger companies, which I would say that Olivia and Kara are both in. Cruise has been around a little longer building its portfolio. Genesis, which Kara is from, is very new to patenting and has some startling statistics about the patents that have already been received. I won't take her thunder. I'll let her describe that herself. But key for all of the younger companies, and I think that probably most of the participants here have joined because of it, is oftentimes early, your only assets are your intellectual property. And so in obtaining it and maintaining it early can be critical. And so Roya really is one of the few people, I would say, in the world really, that has a rigorous way of valuing both patents, say individually, but also portfolios. And that is becoming very important when you are looking for investment. And so what we'd like to do is talk a little bit about the two technologies to give you a little grounding in it, and also the directions for the portfolios that have been driven. And I'll ask each of them to talk a little bit about that and management's kind of instructions or wishes for them. But first, if I could, I'll let Olivia, that was a very short introduction that Roya gave you, a nice one, but short one. I thought, could you tell us just a little bit more about Cruise? And then as you are sprinkling along Cruise, sort of where some of the patent pockets are that you are looking at?
Sure. Yeah. Thank you so much, Roya. Thank you so much, Tracy. It's great to be here and great to see you again, Kara. And Cruise, I am located in San Francisco, California. We're a 10-year-old autonomous vehicle company, about 4,000 employees. And I've been here 6 years, over 6 years. And we have a car in my background here. We have two cars, actually. This one is based off a GM car, the Chevy Bolt. We also have another car that is a brand new custom car that we are currently have limited driving in Texas for that brand new car that it looks like kind of a rectangular shuttle type configuration. I think you'll see more and more of that out there in Houston, Austin, Dallas, Texas, as we make more of those there. But we drive completely driverless. So you use an app to hail the ride and you have it pick you up anywhere you want and drop you off anywhere you want. So for me, I sold my car. So I actually do not have a car in San Francisco. I either walk or take a Cruise car. So that's very, very useful for me. In terms of the patents here, we've had a very strong and positive environment for patents at the company because our company is so innovative. So our engineers and our product contributors, they really want to protect their intellectual property because they worked so hard and invested so much money into developing it. So we have a portfolio of about 2,000 worldwide assets. We focus mainly in the US because that is currently where most of our operations are, but we also do various things like we custom make our own radar. out of Germany as well. So we have some aspects that we utilize different offices and different people, and a lot of very smart people around the world. So it's a very, very exciting time. And I encourage you to, if you ever are in a city that we drive in, to take a ride, to try it out. It's very interesting and fun technology.
That's great, Olivia. Thank you very much. It's completely innovative, and now you are in Houston, and we see the cars driving around. So it's probably a little easier for them in Houston, where it's flat, as opposed to San Francisco.
Right. One of the challenges are some hills. So a couple of the aspects of what we patent are, not just the hardware, but the vehicle chassis and the radar, all the sensors and the configuration of that, but it's the software as well. So we have a very well-rounded portfolio of everything, because we create everything, we do everything. We make the software, the hardware, all of it here. But yes, one of the things, it is harder to see further away if you are on a steep hill, as a human driver as well as a car. So that is something that's very interesting. If you see the sides of our car here, those sensors are their radar, and they actually move. Internally, we call it the owl, but it's because it flips around and it spins around to get around corners, to get around large cars that are maybe trucks or something that are in front of us. So great technology there.
So Olivia, one of the things that's on the tip of everyone's tongue is artificial intelligence and machine learning, and obviously that is such a heavy area for Cruise. How is the patenting going, and sort of with the backdrop of so many people think it's impossible almost? Sometimes they think you can't even patent software, but patenting artificial intelligence is just a whole nother world. How is the experience at Cruise in that area?
Yeah, we've been working on artificial intelligence patents for quite a long time, for several years. I know that it's quite trendy in the past maybe 2-3 years or so, but we've been doing it for a long time to target just mass prediction or perception of certain things. So one example is if you are on the road and you see various types of road users, so other cars, whether they're parked or not, other pedestrians, animals of different sizes, people that are dressed as animals because it's Halloween or something like that. And so we want to use artificial intelligence to accurately predict and interact with those types of objects or people or whatever it may be on the road, right? For example, I was on a ride, and the car was smart enough to understand that there was some some debris. So it was like an empty plastic bag. So it was not a bird, it was just a plastic bag. You do not have to slam on your brakes for a plastic bag, and our car did that very successfully. So if you imagine, there are all sorts of different objects and different things, and some of them you should brake for, and some of them you really should not, if it's not a living thing. And so things like that, I think we've been using artificial intelligence to accurately categorize and predict and interact with those things for quite a while. Yes.
Excellent. Well, I know you work with some of my colleagues at the law firm who are actually experts in artificial intelligence patenting. Um, has that been reasonably successful for you? I sort of predict the answer, but
Yes, absolutely. So Novak Druce is a wonderful firm for us, as you've been with us for quite a long time, and I think that all of the attorneys that work at Novak Druce are experts in AI in general, but also AI for autonomous vehicles and why we might use them for specific applications, and in a way that you don't want to get bogged down by the data or the information, right? Because we have to make decisions very quickly. And so there is an art to figuring out what you need and making a decision in a very timely way. So your team is wonderful to figure out how to capture those types of things and work them together and get patents on them for us. So yes, thank you very much.
Yeah. Thank you for that. And what I wanted also to draw out is that really the patenting area is not as ambiguous as a lot of people think, and that people are actually obtaining patents in those areas, which kind of helps me transition over to Kara to do a little bit of the same thing. Kara, if you would give us a little more granularity on the technology, because I think that's important to also understand the patenting and the development of the portfolio at Genesis.
Sure. Thanks, Tracy. Thanks, Roya and Olivia. That was super fascinating. And I think it's amazing what you guys are doing at Cruise. So as Roya introduced me, I am a reproductive physiologist. So that's a fancy way of someone who studies the reproductive system. And I specialize in assisted reproductive techniques, such as in vitro fertilization or IVF and embryo transfer. In my career, I've had the opportunity to work in both animal breeding systems and clinical human IVF labs. And I realized that it doesn't matter if you're a person, a horse, a cow, or a pig, the way that people evaluate which embryos are good enough to be transferred back into the patient or the recipient or surrogate animal is based on a technician looking at these embryos under a microscope. And that's how it's been going on since the first IVF baby, Louise Brown, was born in 1978. And as you can imagine, there's a lot of discrepancy from embryologist to embryologist on their opinion of if these embryos are good enough to transfer. And let me do a little education here. And most of the time we're looking at multiple embryos, right? So let's say in a human IVF setting, if a patient has 5 available embryos, we need to pick one. That woman wants to be pregnant with one baby. We don't want to put all 5 in there. So there is a reason why we want to be very selective. And it's in everyone's best interest to pick the healthiest embryo that's going to create a pregnancy, a fetus, and survive to term and be a healthy embryo to save both time to pregnancy and the costs and expenses of these procedures. So as a reproductive physiologist, I'm thinking about these problems and I'm like, wow, I can't believe that we still rely on humans to look at these embryos, grade them based off of visually apparent characteristics, when imaging and machine learning technologies have gotten really good and really powerful. At the time of ideation of this technology, which was about 3.5 years ago in 2020, I really knew nothing about machine learning except for that the possibilities were endless. Fortunately, I already had a relationship and business partnership with Tracy. And so I was sitting down with him and I really described that I thought a machine learning analysis of embryos could actually outperform human embryologists and allow us to have non-invasive and objective measurements of embryo health. So that's where I sat down with Tracy. I thought, I explained to him what I thought we could do. We together did a deep dive in all the competition and saw that the use of machine learning and artificial intelligence in embryo health was still very new and novel at that point. And it was completely non-existent in looking at real-time videos. As an entrepreneur, I knew that our solutions needed to be practical for everyday use. They couldn't be too expensive. They couldn't take too much time. And so we settled on using short 30-second video analysis of embryos as our solution. And so that was pretty cool. But what surprised me is how novel this really was. And what I thought was novel, what may not have what had necessarily gone into our patents. Tracy realized that no one has specified frame speeds to be real time and apply an analysis to look at different factors of embryo health. And we also realized that our patents didn't have to be specific to cows or humans or pigs or mice. We could actually patent this for all mammalian species. So with Tracy's help, I thought we had a single technology for one application, but really I believe that we've created and patented a platform technology that can have multiple use cases for multiple species and provide value. And we've really created a lane of our own in these technologies. We've protected it. And we've protected this beyond embryo health. We're looking at genetic competency of these embryos. We're looking at the embryo sex. And we're looking at anything that we believe a video may be predictive at evaluating embryos, even if we haven't proven it out yet. So as an inventor, I've realized how important it is to have a legal intellectual property team on my side and just have open and frank conversations about them, about what I see in the technology, what I think we can do, and then let them use their expertise and review of the literature to see what's patentable in this and how we can take it beyond just a single application to really be a platform worldwide technology and capture the value in that.
That's fantastic, Kara. I mean, I always say this actually is a pioneering technology, and there are very few of them. But to take a 30-second video of an embryo and use artificial intelligence to compare it to others and determine whether or not it's likely to produce a baby, it's earth moving in a way. So I'm not sure if you have our spreadsheet in front of you, but the portfolio that you have managed to build is quite amazing. Can you tell us the numbers on the patents that you have in the short period?
Sure. So we have 16 US patents applications right now, but the amazing thing about these 16 is 8 of them have already been issued, and those 8 actually issued in less than 1 year from filing, which I think is really encouraging to young entrepreneurs. Prior to working with Tracy and his team, I thought the IP process was very long, very frustrating, very daunting. But when you have a team that knows what they're doing, we can actually get these patents filed and get them fully executed in a short amount of time. Because we have a market opportunity outside of the United States for this technology, we've actually filed additional applications in about 40 countries that we think are economically important to us worldwide. And so Tracy and his team manage this IP. And in our case, IP was not a one and done thing. We didn't just say, okay, our patent's filed and then move on. We're constantly in R&D, we're constantly in discovery, we're constantly doing research. And so we just keep an open dialogue with our company about what we've created and what we've done. And I think Tracy actually saw that we were getting ready to go to a conference, had some new data that we hadn't presented yet. And he was like, you know what, I see IP in this. And we actually went ahead and filed a provisional so we could secure that IP and make sure that there were not going to be any conflict in that down the road prior to the conference. So I really think that it's important to look at IP as an evolving process and not something that you file a patent on once and then you don't revisit it. So that's something I've really learned to appreciate. And like Cruise, we don't have as many filings as they do, but these patents are assets. And when you're an early company and you don't have a lot of hard tangible assets, it's nice to know that we have assets in the form of IP that's going to be valuable, even if the product doesn't even make it into these countries that we file in. So it's a very nice asset to have. It improves our valuation and it really improves our position as we enter the marketplace.
Thank you, Kara. That's a fantastic sum up of the technology and weaving it right in with the importance of the patent protection. I mentioned earlier, Roya is she and her group in Oxfirst are one of the very few entities that even pretend that they can put actual values to portfolios. Just because I know your portfolio, I know it has never been actually put a valuation with it. But are you often asked about the portfolio, and how are, others that are either investing, or I know that you have won some different safes and different things like that. What is the response, or what is the demand, I guess, from the investors with respect to patents, and particularly the difference between pending patents and issued patents?
Great question. So not all patents are equal, and different patents have different values. It really comes down to what is protected in the claims. I've learned that if you want to be super specific, you can almost get a patent on anything if you throw enough claims and features in there. But if someone else's innovation doesn't follow that to a T, then they're not infringing on you. So it's good to have specific patents, but it's actually even better to have patents that offer broad coverage. As a startup, we have pitched to several investors, and investors are always going to ask about, do you have IP? And in my experience, a lot of companies say, yes, we do. Most companies will have a patent or an application filed at this point, but they're really blown away when we say, hey, we're a company with less than 10 people on board, and we have 16 US patents and 40 valuations. That's really impressive. And then I usually double down and I'll give them the highlights of what we see to be some of our favorite and most valuable claims. For us, that's analysis of videos of embryos that are recorded at speeds of 2 frames per second or faster. So that captures basically any real-time video that's not time-lapse imaging that you could get on most cameras or phones today. And then analysis of videos that are 10 minutes in duration or less, meaning if someone wanted to come do this on a slower camera, they're going to have to take a longer video. And, time is valuable. So who's going to want to use the slower, clunkier, more time-consuming technology when they can use the fast one? So this is something that I, as an inventor, would have never picked out as being something that was patentable. But I think the IP attorneys really have a different, craftier way of looking at these things and done that. So I usually try to highlight to investors these features. On the flip side, customers, especially the more corporate groups and enterprise groups, are also going to ask about our IP. We definitely have customers in our landscape that have much more access to data and resources and funding than we do. So it would not come to surprise if they would use us as sort of a informant position of say, hey, let's see what mGenesis does, and we have the resources to do it better. But since we have that IP, we have physical blockers that our team is willing to defend to prevent those companies in doing that. And then we just create the position of, hey, this technology is developed. We have position on it. It'll be cheaper, easier, and faster for you to just be our customer. We can work together, we can collaborate, and you can have access to this technology rather than trying to recreate your own and create a strategy around that. So we do get asked about our IP. It's important from an investment standpoint, and it's also important from a customer standpoint for them to realize that we have something that they don't have, and they don't have the means to get it. So they can be our customer, and guess what? Customers improve our valuation. So it really comes full circle, and how this value can be injected in multiple disciplines in our company.
Oh, that's perfect. Thank you, because obviously sometimes it's not dollars specifically that are the valuation. It can be qualitative as well as quantitative. And Olivia, that's probably something that you see more of, because when you have such a large portfolio, dollar for dollar is a lot less likely to be placed, but huge value would be assessed from customers, potential suitors. do you have a perspective on that by any chance?
Yes, I think for a company like ours, there is the expectation for all companies in this space to have a patent strategy and to be patenting and doing things deliberately. Also, to be monitoring the landscape to make sure that what you are doing is competitive. And so this is definitely something that we should be watching when we do patent something. You know, where does it fit in our portfolio? How does it grow? And how does it compare to other companies? And so Cruise does have a board of directors, and we proactively report patent activity to this board of directors every single quarter. And so it is, I think for them, you know, no one who sits on the board is necessarily an expert in patent law, but when they see and they are assured that we have, you know, a team of people in-house and outside counsel who know, you know, everything, and we're very deliberate about what we do, I think it gives them a very good peace of mind that what all the money that is being spent in the investment of this R&D and this development is being protected in a timely way, right? So we want to make sure that, just like Kara mentioned, we want to make sure that things are in promptly and appropriately, especially with the first to file change in the US specifically, to capture things as early as possible.
That's a great point.
I think there's a lot I've been burning to say since we started, because it's incredibly inspiring. I think what I heard today, our other speakers say, is kind of like that there's a bit of a missing link between communicating to the board, communicating to the investors, what is the dollar value of this patent portfolio, and what are the risk rates that are associated with the portfolio, and what are expected future returns. Because in the end, every investor is keen on getting a high return on an as low as possible risk rate. That's always the game you want to achieve. And IP protecting innovation allows a little bit to hedge against the risks, but in the end, it's innovation. The predictability is hard. And what an IP valuation can achieve in terms of its functionality is to help non-legal people who are not specialized in patent law, who don't understand how to read a claim, to understand why is this interesting? Why does it matter? How does it relate to business success? How does it relate to business risks? And also, how does it help you communicate the value proposition of your intellectual property portfolio to outsiders? And we have had great experiences with companies that are trying to invent the future, just like Cruise, just like Genesis, who are going completely new ways to really redefine how we currently live. And what I have always been so shocked about is that we take technology in wild ways. We try new things out. We see if it's going to work. We know it's going to change how we lead our lives. And then we confronted with a patent system that is a bit sometimes antiquated. And the questions we are asking the patent system have also been the same for many, many, many decades. And why I thought it's so important to change it is because if you ask new questions into the patents, new opportunities come up. If you're always saying the same, tend to get the same answers. So what we did with our economic patent assessments was that we really offered an economic assessment of portfolios. And it is nearly like a translation exercise, like translating the language of law into the language of business and business strategy. And we had very good results with that. We have been able to help other companies that were also trying to reinvent the future, be it bringing superconductivity close to room temperature, or advancing the state of play of conversational software, or to measure the fingerprints of babies, or to, well, lots of them who tried to do new things. We have really helped them in the interaction with their own board, in helping for private equity funded companies attract investment, but also for investors to help them flag where risks can be in terms of like that this could get very expensive if certain measures are not taken. And what I hope, and where my big hope is for very great innovators like the United States or Europe or Asia, that we will be more embracing and more open-minded towards asking new questions in our IP and putting really a monetary value associated with risk rates to our IP portfolios. Because once we are there, we can literally get to the point where eventually IP becomes an asset class, just like any other asset class. And innovation will have more means to get funded, which is at the gist of the question.
So that is spot on, Roya. And the needs for these companies to be able to have a valuation made and then present it to other people. Can you tell us a little bit about what Ops First, if you do a valuation, for a company similar to either one of the ones that we've heard about this morning, are they likely to get something that is very dollar specific, or is it, an idea of some dollars together with other qualitative factors?
No, we can quantify this. We have had the experience that it is actually better, well, to have a clear dollar value than a range, because then you know what you expect. But you can also offer a range where you can say under a low risk scenario, high risk, and mid risk scenario, but it is a monetary value, and it helps tremendously people who are not trained in the legal field to understand why they're spending such a fortune on all those lawyers and all these patents. It's not just a cost center. And I've been always many times asked, can you even do it, and how would you establish that? And I'm still puzzled about it, because we're doing things like have cars drive without the driver, and nobody thinks anymore it's such a big deal. And when it comes to IP valuation, people look at this, we can really do it. Yes, of course, we have done this very successfully now for over a decade, and we have helped a lot of companies improve relations with their investors, and we've also helped investors understand which companies are exciting to get involved in. So one example was this Siri type software company, which was a private equity company funded firm, which eventually was floated on the stock exchange maybe 18 months or 24 months ago in that area. And we were brought in actually by the investors, because they said, we have a bunch of patents, they hang out there, they were very expensive to obtain. If anyone were to sue us, we wouldn't really know what to do. So we're not really clear where we should put in more money into filing more patents, and we don't quite see their value proposition. And so we started to look at these patents, and we looked at the litigation landscape, we looked at the licensing rates that you can expect, we identified quite a few licensing contracts which we deemed comparable. We looked at the growth rates in this market, we looked at the development of the patent landscape, and then we brought a lot of different factors together, and we undertook in this instance a greenfield methodology, which looks at early stage technology evolution and helps assess how a general corporate valuation really can be pinned down to the patent valuation, because in the end it's the patents that drive the relationship in many of these companies. So we are able to offer a detailed report on the economic analysis, and it's been very successful. We have helped them raise funding. We have also helped them renegotiate relationships with debt funders. And when it was floated on the stock exchange, it was quite a responsibility to make sure the valuation is on the spot. I would also like to say what we are now seeing is there's quite a bit of IP valuation work also coming up in the context of transfer pricing and assuring tax optimization and clarifying what the value of IP is, as it is coming from situated in various countries for tax purposes. So this is one area which is coming up. And obviously the other question is licensing rates. What's an adequate licensing rate? And God forbid you go into litigation, you usually also need to have a damage calculation and damage valuation. But I really think for early stage technology companies and for their patent attorneys, it helps an awful lot to have a study on the table that presents to non-lawyers what is the expected return, in which time period, what are our compounded annual growth rates we may be expecting, what have others done in the market, what rates have patents been trading, what rates have patents been selling. So there is a lot of untapped opportunity. And I was in Washington 2 weeks ago, and I met with colleagues from the USPTO with the economics team, and it was extremely interesting because the USPTO is starting to collect more and more data, which we can use for IP valuation in terms of the licensing rates, the market activity. I think this is really the future in terms of redefining the relevance of IP to a company. And yeah, this is another example we had where we also helped the company in dire need for investments, and we established a relationship with investment banks who then accepted them for further work, and we were also able to publish the findings in a quite well-regarded academic journal, which gave them more credibility in the market. I think one thing that's important is that as an independent expert, you remain fair and neutral, and that you also say if there's a problem, that this cannot work like that, rather than say, oh, because you hired me, therefore your patents are worth $1 billion. That takes away credibility. But in a general report that the company is issuing, it can be extremely helpful to understand also what the contribution of the IP is to the business. And I think the IP business contribution extends way beyond just excluding competitors. For me, patents are an enabling opportunity that offer the chance to trade, that offer the chance to exchange knowledge, that give you an entry ticket to open innovation, actually, and that give you the chance to have codified ways of knowledge which detached from the inventor change hands. So you can really create a business independently from the business. It's an intangible business in and by itself. And the current phenomenon where when you say IP business basically means the work of patent assertion entities, I think is incredibly reduced. I recognize these entities out there, but there's way more and way more leverage you can put behind your intellectual property. You can work it way more aggressively than just have it there and hope it protects your products. And with the IP valuation, these options become visible, become transparent, and that's really a management toolkit which quite a few companies have found very, very helpful. And it very nicely complements the work of the patent attorneys, I must say.
Well, you'll remember, Roya, when you and I talked about this for the first time in some detail, probably almost 2 years ago, patent valuation has always been kind of like a snake oil idea that it's more made up. And then I learned about the rigor that your process goes through and realized that there are many, many inputs that you can consider. One of the things that I think about is, particularly like an M Genesis company, it's pretty early on, not a ton of resources. What is the inputs that you need? Can you start with just the patent portfolio as it is, or do they have to develop more information for you?
Yes, I think a conversation with the inventor is extremely helpful to understand what the technology is, how it works, to help understand which parts of the technology the patent attorney protected. Because I understand if the patent attorney protects the wrong features of the invention, this may become completely useless. It's very important that patent attorney and inventors are in sync and get the question right. And once we have the basic information, we are very interested in a general evolution of the market and how the company performs with respect to competitors and what others have said, what they think will be the outlook for for this type of technology. Now we know that both companies are working in sectors which promise double-digit growth rates over the next 5 years. So these are high growth opportunities. The opportunity for both companies is massive, is really important. There are also risk rates associated with that. There's still a strong skepticism about putting autonomous vehicles on the road. There's also some skepticism probably around AI and embryology, prediction, and so on. But that can be overcome, and it's a skepticism, it's not an obstacle. And what the IP valuation can achieve is not just do an overarching business outlook, but a patent business outlook. And we achieved that by looking at how the litigation looks like, how licensing contracts in that space look like, by helping understand how the patent portfolio performs to competitors, and determining what could be the risk rates associated with that. I recall we did a report for Novak Juice, many were 7-8 years ago, and they got a 150-page long analysis of the value of the patents. And the transaction went very smoothly and very successful and very much in the interest. And the others had then another economist who said their opinion, but did not challenge the fundamentals of the valuation. And for me, there's always the question, do you lose anything if you do it? No, you don't. There's not a downside to that. It's not that you're doing something which then could harm you or do anything bad, but it is a way of giving you a wealth of opportunity of management strategies in terms of how to maneuver your patent portfolio in the future, because it looks at the patents from a different discipline. It looks at it from an economics perspective and not a legal or judicial perspective. And I think patents for me are an economic instrument. They're the currency of the knowledge-based economy. And as the currency of the knowledge-based economy, it's incredibly important to value this currency or to have an understanding what's the volatility of the currency, how the currency exchange rates look like, all of this. And there we have maybe still a gap in terms of that different professionals need to speak more together with each other, that the investment community is in a silo and the legal community is in a silo, and both are doing quite well for themselves. So nobody has massive pressure to change anything. But I really, really believe for the sake of innovation, for the sake of assuring the future of technology, it's quintessential that we ask aggressively new questions in patent portfolios to simply make them work harder, and maybe also to move from a very litigious discourse to a more inclusive discourse where the IP provides a bridge between corporations, because the IP valuation allows you not to say no to not invented here syndrome. If it's cheaper to buy technology and patented technology in rather than make it yourself, then for God's sake, buy it from someone else or license it in for someone else. But for this, you need to have the prices, you need to have the rates, you need to have a feeling what is cheap, what is expensive. And this is what we can achieve with this type of analysis. So I think what we are trying to make sure is that the law isn't catching up, is still not behind all of these crazy new ideas in terms of how we push technology forward. The law needs to be on the spot. And patent law is a bit sometimes so on the spot with its territorial limitations and with its, with a lot of notions which are not totally, as fast as the inventors would probably need it. And the valuation is a way to move that forward.
So I think probably one of the important things that we've learned in this 45 minutes is the people that responded to this because of the title about intellectual property valuation for investment. The great news is you actually are talking about assigning dollars. It's not going to be something very nebulous at the end of the day. And so there is this product and rigorous process to get a real answer for them. And sort of in that, I know there was the possibility for participants if there were questions. I don't know, Roya, if you wanted to go to that possibility now.
Okay, the one question we have is hello. That's not really a question. Okay, you have to, okay, yeah, fine. So does anyone have a question at the moment? I'm not seeing any questions in the chat. If you have a question, would you mind raising your hand or putting in the chat that you would like to speak? And we'd be more than happy to take your question.
I think we'll watch for questions. I think a topic like this is
2 questions.
drinking
Oh
from
my
a
God.
fire
This
hose.
is not a question, this is an essay. This comes from Thomas Kröner. He's writing, university startups often have an exclusive license from their university at first and do not immediately have the IP rights in the company. After reaching some milestones, the portfolio can then be transferred. Do you see a problem with this? Must the IP in the company immediately after founding? If yes, how should the startup pay the patent application?
So I'll take just the very easy part of this, and that's the last sentence. It is difficult to spend the money for the patent protection. It has to be prioritized. Unfortunately, you can't do a valuation on a patent until the patent does exist, and so oftentimes I see that it is a provisional patent might be filed early on. Or maybe nothing at all. But you know, early stage companies just have to push that to a priority if it is going to be an IP based company.
I was just going to add on to this from personal experience that this is a very challenging and very real situation to a lot of startup founders. You know, a lot of researchers create IP within the university. The university does own that IP, and for a good reason. It's their money and their resources that went into protecting it. But at large, university IP has historically been very unsuccessful at getting commercialized, just because fair and equitable agreements between the startup and the university are typically not met. Sometimes they cripple the startup. And so on the bright side, I have a lot of friends that work in the academic sector, especially in the entrepreneurship, innovation, and commercialization aspects, that are really working to change the way universities gatekeep their IP and release it to the investors. So while historically this has been a problem, and I think it still is, I do know that this is something that's commonly discussed. It's widely recognized, and there are groups out there that are working to address it directly within the university system. And I know that one of the first questions that I get asked from investors is, does a university own this technology? For mGenesis, the answer is no, we wholly own all of our technology, but universities do a lot of great research and they should own their IP. But I think that if the inventor envisions being the commercial entity for these technologies, they need to address that right away when disclosing this to the IP. And I also know that one way forward is sometimes inventors and universities can come up with a deal before filing that first application where they might joint own it, and so licensing is less than an issue. So my advice would just to be straightforward, but remember that universities won't make money if the startups make money. So deals need to come to agreement to get this commercial out there into the commercial sector.
We had a very good experience with a Canadian startup, which actually in the beginning said, we do not want to do a patent valuation. We had a traumatic experience with the tech transfer office along the lines of what you mentioned, Tara. And we don't even want to license anyone else evermore. We're just happy we're out of this. And it was a long deal for them to get the IP out from the university into the company on only a licensing basis. And it still worked out very well for them. We helped them with the valuation, and we helped them with the licensing rates they could charge, and they got a fortune in licensing rates in the end. And so it went well, but there was a bit of a negative taste in the inventor's memory. But we meanwhile have 11 questions. Wow. Okay, so Eduardo Paz, he's asking, is there a possibility to have evaluation for patents which are not licensed at the time? And yes, absolutely, there is a way. I think these are the most interesting patents to value actually, because there you really need to think what is the business proposition and the business relevance for that. And there are valuation methods that absolutely allow to do this. Then there's another question from Afshana Anwar. There are many different ways to value IP. Which one is the best? Marketing, income, cost? I would like to say, like in law, the answer depends on the situation and on what questions you're trying to answer. There's not one size fit all answer. Different valuation approaches give you different ways to look at the IP and give you different insights. Valuing on the basis of comparison gives you an insight in how you're performing with respect to others in the market and what can be a typical rate in the market and what's the relationship between you and the market. If you're valuing it on the basis of cost, then you basically get an insight into how much money you have already spent on getting your patents. The relationship here is a bit interesting because the value of new ideas is not necessarily related to cost. Some ideas, some great thought-breaking ideas you have in a dream, and others you spend months thinking about how to crack it and you can't crack it. So it's not like chopping wood. If I chop, not me, but if someone who knows how to chop wood chops wood for half an hour, she can probably chop 10 trees or whatever. But it's not wood chopping. We're talking about research, creativity, innovation. There's no direct, it's not so easy. So sometimes you want to do a combination or you want to go out on your own completely and how to look at it through more general econometric models rather than just mere accounting models. Carve, can you discuss getting valuations where information are not readily available? Then there's another one from Sam Khoury. Sam Khoury, I apologize for how I pronounce the name. Do you use a discount rate for VC or do you use normal discount rate with additional risk for patent assets? Patent filings and maintenance. Have you seen an increase in firm seeking? Okay, this is a lot. I feel like I'm being cross-examined. Please, if you feel you want to add to that, I'll try to answer to Kerve's email question. Can you discuss getting valuations where information is not readily available? The reality is that this is most of the time the situation because patent markets are not the most transparent ones and they're characterized by lack of information asymmetry, and the non-disclosure agreements we are constantly signing everywhere do not make life easier for a patent valuer. So that's the situation we're in, and we're still getting our way through. There are ways to do this. There are also sources. I would like to say the US government is making efforts also to increase transparency on patent assets, which is great. But overall, we're still tapping a bit. It would be super to have more data, but lack of data is usually what economists suffer most from. So we know about that problem in our discipline, and we know how to master it. Then there's maybe a question for you guys. It's patent filings and maintenance are costly. What's your recommendation on balancing broad patent portfolios and costs? That's a question from Julia Samadin.
I can comment on that. I think Kara gave at least a hint to this, and that is if you can characterize something as your base technology, though you may have some nice nuances on it in addition or later, go for your core technique. If it's patentable, go with it, and monitor when it is that you have to file internationally so that you can get the input ahead of time for that, because that is where even, incredible expense is incurred. So yeah, I would say try to focus the technology so that you have a primary patent, and then build a fence around it so that you're not incurring all of the cost in the very beginning.
And then there's a question from Ian Rogers. This is where corporate spins out a digital startup. What is the difference between the spin out having an exclusive license versus an assignment? Do you see benefits in one over the other? So exclusive license or an assignment? Is there any pros and cons to both of that, or what's your take? Any preferences?
I think from my perspective, is ownership is always the best, because a license usually is going to have some terms upon which you will lose your rights. An assignment does not. It's non-conditional. So I would say, yes, an exclusive license would probably be less desirable, but if it's all you can get and you have to have it for your technology, just takes more terms, but it's a secondary substitute for an assignment.
And then there's Sam Curry is asking about the discount rates and how we go along with that. I'd like to say this is just an introductory webinar. It's perhaps a bit too specific now to discuss the very peculiar features of discount rate. We may lose our audience, but obviously the discount rate is a key feature in terms of how you go along if you use a discounted cash flow model. And then there's a question, have you seen an increase in firms seeking an IP valuation for the purpose of securing debt finance? Or is it predominantly where firms are trying to raise equity finance? Then there's another question on, can you please elaborate on how you get around the uncertainties natural to technology development to get a particular dollar value as opposed to range of possible values? Thank you. These are still any takes on that? Okay, then I'd like to say on the debt finance, there have been quite a few initiatives from various investment banks, the European Investment Bank, the Inter-American Development Bank. They have all started to explore the matter of IP valuation, so to assure there's better access to finance. It is the UK Intellectual Property is also working on this matters. WIPO has been working on this for decent 20 years now. In terms of getting that linkage to, it's absolutely weird that you have great new technology, and when you go to your bank, at least in Europe, they look if you own a house. So they could take the house as the safety and not the great new technology you have. So there's still a bit of a gap here. When I was in Washington, I was told in Washington, people banks are already more opening up. My personal experience has been that banks have considered the valuations we prepared. I have seen it, and I've seen it make them happy, but I was not directly involved. That went to the investment people. I was just doing my economic analysis and limited myself to that, but it did have an effect. It would be extremely interesting to see more systematic analysis on where markets stand at the moment, and that the European Union has done research on that. USPTO is currently doing research on that. Let's see what they come up with. It would be very interesting to know what the market generally is. Okay, I think, oh my God, please, I think we're over time and we may need to give up. We are 5 minutes over time. We still have 8 other questions. Guys, interesting in the panel's thoughts around the EU's push to regulate SEPS licensing. I think we're not really talking about SEPS licensing now. It's a different question. But obviously very interesting evolutions. I think the European Commission's SEPS policy proposal is all built around the question of IP valuation, which is a complete novelty and very interesting to observe. We're seeing where the fund royalty rate determination was a question that eventually was asked, to being a core question of public policy formulation across the European Union with an international touch. So it will be very interesting to see how this evolves further, what European Parliament will approve or not, or disapprove, but overall just see the European Commission develop a huge chunk of its policy formulation just around the valuation of front encumbered standard essential patents is extremely, it's great news. It shows that we are really coming to grips with the economic aspects of IP, or trying to. I think we are losing our audience, and we have gone over time. And I apologize to all the other people who were not in a position to ask to have their question answered. We are very happy to take these questions off the record outside this webinar. This was really just a very short, brief introduction to illustrate how IP valuation is really needs to be at the same pillar as autonomous vehicles and research into embryology, by looking at AI instruments, by asking how the patents created by patent attorneys can help these companies have a stronger position in the market. We need to have an economic pillar next to it. So this was a short intro into our world, and we hope you found it interesting. And I would profoundly like to thank Olivia, Cara, and Tracy for this amazing contribution today. And for our audience also, for asking all these questions and for patiently being with us, even though we went over time.
Thank you, Roya. I think it was a great presentation. Thank you for including us.
Thank you. And we have our next webinar in November on IP valuation for licensing purposes with Novactors and with IBM and probably also another technology company. And we hope you will join us for our next webinar in about a month from now. Have a lovely morning, afternoon, evening, wherever you are currently in this world. Bye-bye.
Thank you.
Thank you.